All right. So, fell to about the bottom of the market maker's expected move, down about another 50 points on the day. We did lose 6,000. We are probably roughly at the trend line on ES. Pretty well, at least pretty close to it. We'll look at that next. But this should be setting up for more of a downside continuation. The failed bounce on the 50 MA and then closing below it into the end of the day, which I'll show you in a second, is actually pretty bearish. Especially given that our support came in really strong at the 50 MA on Friday. Yep, right to the trend line on ES. This is the second test. Obviously, a failure of this trend would be very bearish. It would be the first time that there was a true failure of this trend since August of 2024. Losing this is definitely an indication of the potential for a larger correction. To the downside from here, 59.80 is not really a major support, but 59.48 is. 59.48's been roughly where we've bounced on the last two downside moves, but there's a potential that we could fall lower than that. We just haven't in a long time. Bottom of January, we almost hit like the bear confirm down here at 58.07. So we'll see how that goes. But yeah, if this is lost in the overnight session, especially if that continues to sell off into the morning, it's a pretty good indication of a continuation to the downside. Um, Dollar turned up a little bit today, but yields continue to move down. Not really as aggressively as they did Friday, but still hitting about 2 week lows at the top end of the curve. Commodities fell back a little bit, kind of just recovering from their rally. Let's see, there's some support here on the commodity index around like 105. But oil moved up a little, so did gold. The rest of the precious metals didn't do so great. Looks like industrials and materials and agricultural down. Um, Correlation came down a little bit earlier today, snapped right back. They did seem to get it under control a little bit into the end of the day, but I don't think anybody's coming into dispersion trades here. There's been a high demand for out of the money puts, and low correlation alongside that generally puts you in a scenario where you get a big breakdown in dispersion as like participants are encouraged to go long vol the index versus long vol the underlying. Forward yield on volatility closing the day up at 4.31%, which is the highest close on the forward yield of volatility since maybe like Jan. This might be the highest close on the forward yield of vol since like Jan 10th. We'll take a look at that date when we go look at the other things. So correlation on the 3 month continues to rise. We're starting to see a jump in bond volatility alongside that. Moves still well below 100, but moving up alongside correlation is usually expected, and probably a good sign that correlation on the 3 month will continue to rise. Skew pulled back down, but it's still, relative to historic trends near all-time highs. A lot of sold puts on the chain. Plenty of shit to squeeze out to the downside. If you took a look this morning at Delta into the end of the week, there's a shitload of Delta all the way down to like 59.50. 44.73% of the S&P below its 20-day moving average. This actually isn't falling off that fast, and that's because the whole pump was tech. And now that, the pump is kind of starting to fail, it's mostly tech selling off. The rest of the components, not really moving as much. Dow was up today. At one point, Dow was up quite a lot today. So breadth is helping stabilize this a little bit here. But if tech continues to sell off, it'll start to drag everything else down with it. Correlation on between VX and cash VIX fell again today, a little more sharply, from 87.8 to 87. 0.07. And we're starting to see that spike in volatility with the heightened correlation here. This might continue up, especially given that the forward yield on vol is closing positive. That's going to generate overnight demand for volatility, and it technically did over the weekend as well. We just didn't really see that come to pass until a little bit after market open today. But we saw as soon as vol got a little bit lower, it got bought up again. And that happened both times that we saw vol get shorted down pretty hard today. So that demand for long vol is still there. And as people go longer and longer bonds, there's going to be more and more of that demand because their portfolios are shifting over. Like that 60/40 is shifting from equities to the 60 part is shifting a little bit from equities to bonds because the forward returns on those bonds are better than the forward returns on the underlying index or the indexes. And if that continues, like if the forward yield on the 10-year is going to continue to be better than the forward earnings yield of the S&P, more and more of those quite large funds are going to want to get over and into the bond market and get their yields over there where it's safer and less vulnerable. And in doing that, they will want those returns on the forward convexity of volatility. But fund futures, not much of a change. Bear steepener turned around a little bit today, but not much. Right now, while vol's high, if we see the bear steepener start to pick up, that could be very bearish. So far, it's pretty muted. Not much has happened with it over the last several days, but if it does start to pick up again, probably quite bad. So we'll take a look here. I want to look at Jan 10th. Yeah, so Jan 10th was kind of a big down day and then went down more overnight, right? Because that forward yield on volatility was elevated. So probably, let's see, where did this open? Like 57.82, and it closed at 58.27. So almost a $40 drop overnight. And then the next day it caught a bounce, probably as the forward yield on volatility started to move back towards negative. And so, we do have a downside move here. Maybe tomorrow, maybe tomorrow we open around like 59.47 to the downside. We've broken the long-term trend on SPX, and we've lost the 50 MA. So the chances of a downside continuation from here are pretty good. But there is also a chance that we find some support while we move down. I would say 59.50 or 59.23 are the most likely levels for that. So keep an eye on that in the overnight session. But this is a breakdown. It's starting to get a little bit confirmed here on the daily. It's definitely still very far away from being confirmed out on the weekly. Here we actually need to drop substantially lower to get a confirmation. We still haven't tested like the 20 MA on the weekly, which is down at like 59.67. And really, we'd be looking for a drop below like the 58.32 level or 57.73. And then on the weekly, that would be a confirmed correction and a breakdown. So we'll keep an eye on that. Just watch the levels and try to use them to manage risk as best you can. And yeah, I'll see you guys tomorrow morning. Everybody have a great night. Later.